Hello guys, welcome to the Trading Parrot. With Bitcoin entering quicksand territory, you can feel the vibe out there in social networks. Everybody calling for the beginning of a bear market with 100% certainty. We also see the expiry of $50 billion, and in the next few days, we're gonna see what is the actual direction that we can go. Remember that we have 114K, that was the max pain, and with that out of the way, we could see some surprise move coming in very soon. Guys, in today's video, I'm gonna focus on a potential breakout that we are seeing in one time frame, together with a potential breakdown that we are seeing in another time frame. Absolutely, it's never that easy, and I'll give you an update on both the long that I'm currently rallying and my short position that is helping me to hedge my long. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in this video? That will be phenomenal. Don't forget that there is a link in the description to open a new account on Bluffing, and you can claim up to $3,000. No matter how much you deposit, you always get some bonuses deposit into your account. The link is in the description. Let's go straight into the news, and as you can see, we got a 3, and a 5 neutral out of 10. So 2 bearish and 1 neutral. Let's start with the first one, which is Trump seed trade deal agreed, but sell the news triggers 890 million in crypto liquidations that happening on October 31st. People call it the Halloween crypto cash, actually not cash, crash, that sent the price of Bitcoin approximately to around 108, 107, depending on which exchange. And we got another sell the news, which was the expected 25 basis points that was already priced in, that apparently, thanks to the speech, spooked everybody, no matter Trump telling people that it was not going to be a problem because don't worry, we're going to get rid of Powell very soon. Still, it managed to crash the market. And the number 3, which is neutral at the moment, is the 16 billion in Bitcoin and Ethereum options expiring today with the max pain at 114K. But bear in mind that this is already expired. This expired at 8 AM UTC on Deribit. That is this morning in UK time, just a few hours ago. And remember that the final effect that you should expect from options expiring can span even into Monday. We've seen some orders containing the price at around 110K. Those orders post the expiry are still there. I'm very curious if we are gonna get a Friday mini rally as well, thanks to the options already expired. Sminsons with is saying, first I show you gold. If you haven't seen this, pay attention. The copper versus gold ratio. This is an interesting one. I never tracked this one, but it's coinciding with market peaks as well, so maybe worth adding to my arsenal of ratio charts. The peaks of this metric and BTC price are extremely well aligned historically. As an important macroeconomic signal, when it trends down, it signals a risk of environment, what it's doing now, since higher copper represents more industrial activity and higher gold represents flight to safety. Very interesting. Get ready for a big correction. The cross-X indicator has just printed a sell signal on Bitcoin. This is on the daily time frame, and the sell is being printed right there. This particular trader is eyeing a target potentially even up to 93,000. We know that at 95K we have some levels of liquidity, particularly sitting in this area in here on the long-term liquidity pools. This particular pool that we are talking about is not as big as the one that we currently have at 130K, but maybe it is necessary to go there and test the water. It will be really bullish, in my opinion, if we went there and we reclaim 100K on a daily and weekly basis. More Crypto Online is saying, funny how every time the market dips, half of X starts declaring a new bear market, like it's some prophetic moment. A bear market isn't about vibes or feeling, it's structure. It's confirmed when major support breaks, not when sentiment turns sour for a week, which is currently the case. You can be short-term bearish, sure, but calling a full reversal before the chart actually proves It isn't analysis, it's guessing dressed up as confidence of people who try to be first when calling for a bear market. And I completely agree. So that's why when people ask me, is this already the bear market? I say, well, I don't know. I still don't get confirmation of that. I still don't get confirmation that we are going to extend into Q1, Q2. So we will have to wait and see. I have those lines in the sand, and remember, to get into Q1, Q2, I will at least expect that Bitcoin goes into 130K, puts a new all-time high in November, and then I will have to see if that holds there or if it's just a blow of top to really being able to tell if we have higher confidence to expand into 2026. Of course, we started the week with so high expectations, and I'm not talking about myself, I'm talking about crypto Twitter. Everybody was saying we have all the catalysts to extend into 2026, the super cycle and whatever crap everybody was posting. Since they couldn't reach the candy, now everybody's sour and everybody is just focused on calling the bear market because we all knew it was coming, right? And you can see that even in Polymarket, people now are betting to fall below 100K before 2026. Alien OPS is saying that BTC could follow this trajectory, which is basically losing 100K and go all the way sub 70K and then put a new all-time high. It's been 9 months since I sold my BTC alts to rotate into stock, real estate, and various other businesses ventures, Roman is saying, and he's not just bragging about this and showing the performance that he managed to get with the other investments, but also calling out all the haters that told him that he was really stupid for doing so. And I keep telling you, the people that really know how to trade, they tend to exit early. They exit when they can. They don't exit at the right top of the market. My exits on XRP, Solana, Ethereum were averaged out. They were not the perfect exits, but they are going to turn into exits that in 2026 and in 2027, people are going to think that I'm bragging about them. And everybody that say, hey, but you miss a little bit of the rally, they're just going to go quiet. Ted is saying that BTC went below 107K support level, but has now reclaimed it. Bitcoin is now struggling to hold above the 110K area, which isn't a good sign. We're going to look into the order book. We have just above 110K, a big order that we need to size. We need to understand what is our resistance at the moment. The first major level for BTC to reclaim is 112K, and only then could we see a broader market uptrend. If this doesn't happen soon, expect a dump below 100K. Axel is saying over the past 48 hours, the open interest versus price divergence on the 7-day percentage metric has increased from 5% to 10%. The current divergence between open interest and price indicates a critical imbalance in the Bitcoin market. The most likely scenario is a correction to the 100K to 105 area through the liquidation of highly leveraged long positions, followed by potential stabilization of reversal. That is why I am not as keen to add in that area to my long. It could hold, but it could go slightly lower. If you really want to know what I end up doing when we go there, because it's all going to be based on what happens in the charts, you can join my Patreon link in the description and you're going to get an email with whatever move I do with my long or with my short. Ethan is saying that Bitcoin is going to 70K. Here we go, another 70K caller. I wonder where they went, where did they go last week when we have all the catalysts? Mr. Ethan, why you were not posting this last week? They posted after it happens. Pretty much 99% of all technical analysts are lagging indicators and you can just delete them. In this channel, we do not do forecast. We do not say this is what's going to happen next week. What we focus on this channel is to make money out of trades, to be on the right side of the trade 100% of the time without necessarily knowing what's going to happen next week, which is critical that you get out of your head thinking like that way, because that is gonna screw you up. Breaking: the US Senate just voted 51-47 to end all President Donald Trump's global tariffs. This is getting out of hand. And this could really flip everything, because remember, the tariffs are an incentive for inflation to stay high. This is nothing about politics, guys. This is about how this could be perceived by markets. If we get this just around the corner coming in, it's gonna be a big arm wrestling, I suspect, assuming that the news are valid. Let's look at what my community in Patreon are asking for. Eric is saying, what are the chances that from the 106K drop yesterday, the 110K today are only a dead cat bounce? Are market makers really leading these liquidations up and down, and we are just bound soon for another visit to 106K? We'll have a look into that, Eric. I really need to look into the order book, how it's looking today. I think that 110K order might be a little bit threatening. I want to see what's above that. Remember that we left an open interest right at 111. If we can reach that level at the same time and break that resistance, maybe we could accelerate and start liquidating some shorts. Because I think a move from 106 into 110 has not yet liquidated enough shorts that have been piling up all the way from the all-time high down. Is it possible that market maker leaves such a big liquidity up and head to bear market, or is very unlikely due to the size, and Q4 to at least a bounce to 120 is somehow for granted, eventually after going sub 100K? So in every beginning of a bear market, the market maker has to compromise. Now remember that every level that produce liquidity at the top, for example, this one in here, that one there, and the ones that are no longer tracked by trading different, but at some point they were massive. Remember this one up above 20K when people were calling for 9K Bitcoin was packed of shorts, particularly right after the FTX collapse. What I think is that these liquidations that we currently have right above the price are not as substantial as the ones that we took in here or in there. So with every move up, there is less incentive for market maker to take it. Of course, it's bigger than below. It always is bigger down below on an uptrend, sure. But at some point, they need to take a compromise and say, okay, that's a good trade-off. Let's let them win. It is big, but if you also go into a bear market and if you go into 40K, all of this aggregated potentially is bigger than this. And maybe somewhere around those terms is going to be the calculation that they need to do, because if we go into 140, it is definitely going to produce new liquidity sitting all the way into 200K. So this is a never-ending story, right? As it stands currently, will you advise people to close their longs if they get back in the green, or break even, or ride it out a little more for a wait and see? I think, Lara, it totally depends on what's your risk plan. Personally, since I'm hedging, I can stretch it a little bit more. For example, I can get into a break-even situation and I can delay entering into a break-even stop loss, which typically I require to be 3, 4, 5% in profit before I put the break-even. Otherwise, price can come back, hit my break-even, and still go to the upside, and then I miss rallies. I have missed rallies doing so. But if I have a hedge position, which I didn't do last time, I could potentially let it ride into maybe 6, 7, 8, 10% in profit and still not put a break even, expecting higher prices, particularly if we still haven't got into 117, which is very heavy, and 119, 120. Now, if I'm already with a second order on the lower end, assume that we went into 95K, 93K, and I already placed a second order to average down my long, then my hedge has less effect because now they are not equal. My short was average already once, but I do not want to stretch too much the hedge and put my long too big, if you get what I mean. So once I get the second order on the long and a potential entry into a bear market, I really need to be more cautious and look for that break even on the long more actively. Do you have an insight into what long-term holders do in the current market conditions? I have covered this a few times in multiple videos. Long-term holders distribute early. They are cowards, they are chicken, and at 73K, at 55, at 48, at 20K, they were distributing massively. Nowadays, you're gonna see them distributing, and we can have a very quick look. For example, in here, you can see that they are distributing, but they are not in strong distribution. The problem is that people are going to expect at this timing in the market to see elevated strong distribution, which is not what you expect at the peak of the market. Look at what happened at 69K. There was distribution from strong accumulation into the middle line, but we never got into strong distribution before entering into a bear market. Why is that? Because these cowards and chicken traders distributing here. So what is your next goal? Your next goal is to learn the lesson. And if you want to be like a long-term holder, a big holder of massive amount of Bitcoin, you need to trade like them, not like the way you are doing now, which is to try to time it. Can we squeeze the last bit of bull market? Do you think it's gonna happen? Do you think it's not gonna happen? Dude, long-term holders are done, okay? They're distributing just small amounts, just like I'm doing. I'm done with the bull market. If you're still trying to squeeze the last bit, you're just another retail, doing retail things. Pause the video, go find a mirror, get 2 cups of coffees and slap yourself for the rest of the morning until you get it. This is not a million users channel that is trying to keep you here so I make more money out of you. This channel is trying to make you to learn how to trade Bitcoin and crypto in a way that you end the market and you come back to me and you tell me that you bought yourself a house, a car, or at the very least a stupid Xbox. October is in the red and we are about to close it for, the first time in a long time with minus 3%. We do not have an example of what happens after a September green and then an October in red. As you can see, we have the opposite in 2013. So I cannot really comment, but we still have a few hours to close in the green. And I think a 3.5% rally to the upside is not impossible. You can see that we are attempting now to come back in the area of the previous CME gap. Not that it matters really, but there are some levels that we need to cover. We need to talk about when we get into the high block capital chart. We will talk about the open interest that is right here. We'll see if we are going to tap that level next. We are on a Friday. So ideally, the best thing that can happen to the longs is that this price goes as high as possible. Okay. If we get a rally on Friday and we close Friday at a high in here, 116.5. Oh my God, that is massively bullish. That means that really they trick you in all directions and we could be seeing an all-time high in November. I have updated the Bitcoin status. Let me send this to my community. And we got a 4-hour that's looking promising. It's already in the green because we could be seeing a breakout on the 4-hour, whereas on the daily we have a breakdown potentially incoming. It's not confirmed, but I put it in red just in case. If things change, I can change it during the day. The weekly, no changes so far. We are still with a lot of things to do on the weekly to get out of trouble. Monthly is going sideways a few months in a row and there's still an uptrend on the monthly. We are currently still holding the support on the RSI monthly. I'll show you that in a second. You can see in here the breakout on the 4-hour is already confirmed, settled. So we now have to hold these levels. We have that double bottom. We didn't produce it in the way I wanted, which is with a bullish divergence. We will have done that if this recent pivot reached 37 around that level, but instead it went way lower, not allowing this formation to divert from the price. Therefore, we don't have bullish divergence. We just have double bottom. And we are looking into getting into 68 if this holds during the day. And that could bring us into 117.2 if we do just a revenge rally into 68 RSI on the 4-hour. Okay, not guaranteed, but well, we just increase the chances of achieving that I am not yet break even. Remember, my entry is 111K. And we are currently trading at 110, so I'm 1K below my entry. I need this to develop throughout Friday. Ideally, we get that thanks to the expiry of the derivative options, which should not be compressing anymore. But as I'm speaking, we are hitting that order at 110.5. So hold on to your horses and let's see if we can break beyond that level. Look at the daily. We broke down and we confirmed that. Now intraday, we are testing this as resistance. So we are very close to the daily resistance of 47. We're going to have to see where that is. Let's change this to 47 and let's see where the daily needs to go. And as you can see, the daily has already pierced that resistance. It attempted to reclaim the daily as support, but it's being rejected so far. To get us out of trouble, we need to close the daily above 110.6. By doing that, we could get a bullish signal from the daily, because reclaiming this means that this move down was a fake out for the bears. Reclaiming that means, well, we are ready to go way higher, and that could join the party potentially with a 4-hour daily, and then we can get two strengths pushing to the upside. On the daily, the volatility is getting very close to overextended, so hopefully we can use that to get some bounce to the upside as well. We still do not confirm the bearish cross on the MACD. As I said, getting just into 110 and 111 is gonna look now like we're not gonna close it. Ideally, we can dodge this bullet and not put a bearish cross on the MACD. I suspect for that we're gonna need to reclaim 110.5, hold that level above it for a few days, and ideally the weekend as well, and then we'll see. CPR, the first support, is holding perfectly. You can see by the dollar, we close above that initial support. We are about to close the month of October, and we are expecting to see the CPR pivots again around this area, potentially, I will say at 113. So we are going to start with a virgin month, and price on Saturday is going to have to lose virginity. Lose virginity means that the price is going to have to touch the pivots that belong to November, possibly located around here, and then it's going to have to cross them and stay above, and then deal with the forecast of October that says that after we touch support in November, we also have to touch support. So let's draw it. Let's imagine the pivots are right here, and the first support of November, first resistance of November are somewhere around here. So you start on Saturday, you lose virginity by touching the pivots, and then price needs to come back down and fulfill the prophecy of what the model is saying of October, which is you touch support. In November, you also have to touch support. Now, if we get super lucky, if we do the unthinkable, we reclaim this and we go in November into that. In that case, it could be that the seasonality wins against the model of the CPR. Let's cross fingers for the bulls that that is the case. Personally, as I said multiple times, I don't care. I'm here to make money. I'm not here to hope for extended cycles or for any direction of the price. My focus is on how do I ride those two positions in the less risky way possible, so that I either protect my capital by breaking even, or I make some profits. And I will continue to have that approach forever. In the bear market, in the bull market, it doesn't matter. On the weekly, we can see that this week we haven't done that much to invalidate the head and shoulders on the weekly. The previous week we did a lot. We closed right there. But this week we just have a couple more days until Sunday to reclaim 116 now. We need to reclaim 116. If we do not do that, we're going to be in trouble, and we're going to potentially increase the chances that we fulfill the technical targets that is between 93 and 88. As you can see, if you look at 1, 2, 3, 1, 2, 3, we are following by the book every single thing The only difference is that our number 3 in here is next to the all-time high, whereas the number 3 in the previous cycle was the dead cat bounce, already sending us into the bear market. So I really don't know what's going to happen, because some things are still different, and not just the momentum versus price, but also the timing a little bit. Because why? Well, the all-time high on number 2 was in November. In here, we already have in number 3 an all-time high. So you can see that not every step is perfectly matching, but a lot of them certainly. Let's look at the SOPR, because although there is some profit taking on Bitcoin in here, getting into this area, which could signify some weakness in here. On Ethereum, we have the opposite. We have a lot of people that have closed their positions in a loss. This means that we could be getting closer to another signal for Ethereum bullish. We are talking about signals that mean that maybe an entry at 3.7 was a good call. In my community, internally, privately, I told my members that I am not interested in 3.7, although that is maybe a good compromise for an entry at 3.6. I am still much leaning into a 3.3 to 3.2 for Ethereum. Either give me that or I don't take anything. You can see that the monthly is just going sideways in here. There is no structure broken on the monthly. The model is getting closer and closer to the support, the top-bottom BTC model, which has pretty much survived anything on the lower and on the top end. The monthly is about to close, and you can see how close we are to the monthly support. Closing at support really tells us that there is then a higher chance that in November we bounce off support and we go towards the upper end, which is something that we haven't done this cycle. In every single cycle, we hit this trend line. In this cycle, we just hint that we are going to do it, but we never do it. We went above 70 for 1 month here, 1 month here, 1 month here, and 1 more here, but barely above 70, just 5 fractions. And now we are at support at 65.87 by the dollar. And if we bounce from there, is this going to be our chance to get into 77? I don't know. But if we do that, price can reach 155K. Now, what do we need to do to keep that target? We need to prevent what we did in the previous cycle, which is to lose it. If we close October, if we bleed from here into the last hours of October, and price goes below 109. Let's say we close today at 93K. Hypothetically speaking, we get a crash in the last few hours of Friday. We go to 93. We're going to be in a very similar situation as this area in here in 2021, which means we are now below monthly support on a closing basis, and we get the chance to do a rally into the rejection area. What is the difference? Well, we did all of this in the past cycle from April into November. So doing this from October into November leaves us only 1 month to do that, okay? Or we do it into Q1, Q2 with an extended revenge rally looking like this, right? More or less, okay? Not perfect, but that gives us, that March look for a revenge rally with potentially a new all-time high, because bleeding like this down means we take out all the longs, and if we get that revenge rally, which is not guaranteed, potentially that extends into a March that is still positive. Not for granted the all-time high, but a revenge rally certainly, maybe a dead cat bounce. And yes, guys, yes, I want to be part of that trade if it happens. I'm going to try to survive it. It's going to be fun. Hopefully, it's going to be profitable. Still, we have in the oscillator plenty of longs in the open interest in here, okay? So Axel, I agree with you because we are on the end of this area. You can tell that actually Axel was the same person that implemented this indicator in CryptoQuant. So he knows this thing and he is expecting a little bit more of a flash. If we get that push back down slightly into 100K as he's expecting, or maybe into 93, we might get one of these red signals that we can use to enter a safer long. Maybe if we get that, I can use it to DCA on a second order. we are right now below the short-term holder realized price. That means that in average, short-term holders are in pain. And the danger when that happens is that they might capitulate. If they capitulate, you push the price down. But if they capitulate, a second outcome of that is that we are going to get the SOPR to give us a buy signal. Capitulation is way safer to enter in a long, even if you are, entering a bear market. So we can put Cerberus buy signal, capitulation on spot ETFs, capitulation on open interest, and a long list of additional data-driven signals that we can use for a second long. Should we use that? Aren't you excited? People are scared. Come on, you need to enjoy this thing. As a trader, put yourself in a situation of excitement that you're devouring the data and using it in your advantage. Of course, do it with small amounts so you can allow yourself to enjoy this. If you can enjoy this consistently and you can consume that data like a pro, eventually you scale up your positions and guess what happens? You ride a full year of wins. Work on the psychological aspect, on the emotional side, work on the data, and I promise you, you're going to get there. We get another big sell in here, second consecutive one right after we got Trump to meet with Xi. Disappointing meeting. I watched a bit of it and it really looked like Xi, I don't know the face, if it the cultural aspect. I know that they are very dry and the president doesn't express anything on their end. It's very different to Trump that is very emotional, in my opinion, humble opinion only. But it looked like, he's a tough negotiator. He doesn't really care. And careful with what's going on in the world, okay? I've been watching a lot of videos about what happens in Taiwan. If you don't know what's going on in Taiwan, if you don't know what's going on in Japan, you're living under a rock. As an investor, as a trader, I encourage you to look into what's going on right there. Do you have a MacBook? Do you have an iPhone? Do you have any chip? Or you think that NVIDIA is producing chips? No. Definitely not. Let's talk about that in the general markets video so you understand what is the current risk in the market, what could spoil the AI bubble. We are still in fear at 29. We got the Cerberus not printing yet the buy signal, but about to do it. Just push slightly higher with the price and we could get a buy signal. Push it slightly lower and we just end this week only with the settle warning buy and nothing else. What is the implication of that? Watch my previous videos this week. I'm not gonna do another 1 hour video explaining the same thing. So short-term liquidity, I wanna zoom in here to see what we got right in front of the price. I'm going to leave for later looking at the rest. So that 101 is, let's see, it's 10K down. To kill all liquidity to the downside, we need to move now 10K down. And we are bouncing off from 106. And what do we have 10K up? We start consuming the liquidity that we noticed came from the shorts that started adding up in this area. That is located at around 116.8, 117. If we could move slightly more, we can consume up until 120, okay? That is hypothesis number one. But let's put these two together. Yeah, 100K is more, yeah? But so from the point of view of liquidity that is closer to the price, let's call it 10K, up and down. Which one is heavier? 100K. So could this be a dead cat bounce and then we go into 100K? Absolutely. Can you take a long in here and hit that level with full confidence? No. You have to use risk management. You could end up being puked from here and then hit at 100K. That is your current risk for a scalp. If you zoom out, 97K is bigger than 100K. 93 together, all combined, is bigger than 100K. But 130 is the big boss, sure. But to get into 130K, we need to start by moving 16K up. This liquidity in here is 14K. So it's very close. The call is very difficult. I cannot pretend in this video that I know that we're going for 130 or I know that I'm going for 93. All I can do is manage the positions accordingly to whatever happens, take advantage. We already look into the long-term liquidity. Let's update the 3 months and the 30 days. Sub 90K is the bigger for the last 33 months, but if we went straight into 117, there is that low-hanging fruit there. So consider yourself informed that 117 is attractive. There is a chance we go there. There is a chance we go here at 88K. So protect against both situations no matter what you do. And 105K on the 30-day is the second largest. The biggest largest one on the 30-day is 116.387. So could it be we're going there? Sure, maybe. We are already in a long. If we get there, happy days. If not, we focus on adding on the long. Let's now switch into Market Monkey Terminal that currently has 2.84K of resistance located right there at 111. A few hours ago, that was at 110.5, which means that potentially guys, this is just spoofing the market, making them believe that we won't go into 117. That 117.5 has resistance of 1.39K, approximately half the 281. So the potential to go into 117 is on the table as long as this spoofing order continues to move up and up and up, just making it look like they are going to stop the price. We have a big POC, point of control, right there at 112 approximately. Watch out for that, because it could turn into the final nail in the coffin for this, turning into a dead cat bounce, and then we can puke into 103. I'm not ruling that out, of course. I cannot. So when we get into the point of control, if we get over 112 with a 4-hour close, that could be further confirmation that really we are getting there. We are going to get into 117. Additional confidence, never certainty, but additional confidence. If we get rejection into 112, like a big one that puts a new low, sub 106, you get again additional confidence that we are going to hit low hundreds. Is that confidence what I'm going to use to enter into new positions? Never. That confidence is just to hold a winning position stronger, not to enter. When you enter at those triggers, you're already too late and you're ready to get smashed due to a very poor risk to reward ratio. The CBD is very low, so sellers are still in control. I do not see this putting any high, so careful with that. That's a bearish alpha. Longs are not coming back. Shorts got decimated with this move up, a lot of them, and open interest is resetting again. I am not seeing much interest in this move up because the open interest is not peaking, the longs are not peaking. And as we speak, they seem to have moved the 111 order and flip it into support at 109.5. That is nice, but it could be part of the spoofing. Careful to both sides. Okay, let's have a look at FAR charts. And on FAR charts, I continue to see a lot of resistance. We got that 117 shining there with 43 million, 119 with 36 million. Below the price, we have now some support at 105 with 34 million and at 100K with 35 million. Of course, the 130 stays the biggest pool with 57 million dollars. The purple whales close some of their position into the rally to the upside, so that's a bearish alpha. Careful guys, the purple whales are pulling out. It could be that we are not gonna reach the 117. What am I gonna do with the long? Nothing. I'm gonna just keep it there. Let's have a look at high block capital. We got plenty to cover in here, starting with this massive signal. We got 1, 2, 3 times in a row reading around 70 that was precisely coinciding with local bottoms. Local bottom 1, local bottom 2, local bottom 3. What a great signal. And yeah, I was sleeping at this point, or I wasn't paying attention to the charts, but that bounced at 106 to 110. Now it's coming back down. We need to pay attention to this. Last time we have a top, it was a 52. So if these longs throw the towel too much into this area, we are risking that this rally is done. Let's look at how the order book is looking. Very different from yesterday, guys. Yesterday we have everything in the red, and price puke from my entry 111 into 106. So you're probably thinking, so why did you enter in a long against everybody? Because many times being contrarian works out. We were at daily support and I really like to enter at that order. I don't regret it. I will do it again if I was there by looking at the charts. As we got into 106, the order book flipped slightly more bullish. Right now we can see that we have support or bid currently holding the price. It could be spoofing, but at the moment we got plenty of support. 06, 11, 22, 18, 08. Everything is in the positive except for 20% and below the price. I wonder why above 20% the price. Probably there is a big order that wants to sell, so watch out with that. Let's go now into this area. It's showing that support in all percentiles. That is good. And we can see that the shorts are in big trouble in here. 600k of delta, that is positive, but very time sensitive, guys. As we get into the 111, we can see how the price is chasing for this area in here to hit those shorts that enter late. We got almost $1 billion again entering at 111. They enter halfway to enter a long, got decimated. Halfway down, they enter in a short, and now price is chasing them again. Both sides taking a late entry. What a bunch of losers. They're gonna get kicked again. I don't know if we get back in here, if price is gonna be able to cross that. But again, that's just something interesting. Nothing really to change my position at the moment so far. On the fair value gaps, we can see in here that we left these 3 fair value gaps to the upside. We just built one to the downside at 108. And below we have all of these scary ones for the bulls. So pretty cool that we have a breakout on the 4-hour. Let's hope that that breakout is going to turn into enough strength to reclaim support on the daily, so we can flip both sides here for and daily. So we can go for that 117 into 120, so my long can take advantage. If it goes beyond that, my short gets stopped out in profit, and I let that long rally into November. Let's see if we get an all-time high. Why you didn't talk about the all-time high yesterday? When did I say I know where the price is gonna go? I have no damn clue where the price is gonna go. I don't even know if we're gonna put an all-time high, if this is the beginning, the end of the bull market. I just know how to take advantage of price. That's it. All right, guys. See you on the next one. Take care. Bye-bye.